One of the biggest questions Tesla investors have right now as we enter the fourth quarter is, has Tesla's auto gross margins bottomed, and are we finally going to see improving margins as cost of goods fall? Today, we're going to review some of the big hints that perhaps this is actually the case. In a very unusual move, Tesla have suggested that there will be price hikes to the Model Y in China. If so, then this might forecast a confidence of the gross margins. When this happens, the sentiment by investors in Tesla will skyrocket. So today we have Brian White joining us. He's the host of his own YouTube channel called MyTeslaWeekend, and he's going to help explain and explore whether or not the gross margins have finally bottomed, and are we going to see brighter skies as we move forward. Welcome, Brian.
Thank you, Herbert. This is a great topic. There's so much opinion on both sides, I guess I would say, in both directions. And yeah, let's discuss it.
So this is the gross margins that as we track it over the years from Q3 2020 to Q3 23. So as we know, we were seeing pretty well sky high auto gross margins, which is in the red, excluding the red credits. We started to pump up all the way to 27, 26, 27, and then we started to see it fall. And this is why investors have been pretty concerned about Tesla stock. We have now saw 16% in Q3 2023, despite the good news that the energy gross margins is finally greater than auto. It still doesn't dampen what's happening with the kind of the concern about Tesla. So this came as good news that there is hints, which again, it's not usual for Tesla representatives to give these hints that there might be a price hike in the Model Y. And so, this would be a price hike weeks after Tesla already raised the price of the Model Y Performance by about $1,920. And so what happened was multiple Tesla salespeople posted on their WeChat status that the price of Model Y was going up in the country. The Tesla staff reportedly noted that the price hike would be a continuation of that same price, but now to those roll out to the Model Y Performance for the other group of cars. And apparently this information was echoed by media outlets. And then there was also some other representatives of China, a comment from Tesla China stating that it was indeed planning to adjust the prices. So this is, again, so unusual. So these are the current prices of Model Y in China: 36,000, 41,000, and 50,000 for the different variants. Again, just really high price for China, and yet it's selling number one. So Brian, what's your thinking? I mean, there's no way that this was just rogue staff doing this, right?
If it was one, then sure. Two, maybe, but once you get past two, it's getting pretty interesting. Now, it could be a decision that they pull back on, that they decide not to do, but it makes sense to raise prices on those models in China because the number of Model Ys that the factory in China can make is finite. They're going to sell as many as they can to every other country that already has higher prices. I'm not familiar with a country with lower priced Model 3s and Ys than China. But remember, China also exports Model 3s and now we know Model Ys to Canada. Those will sell for a higher premium. Why are we giving them away in China when we can sell them for a nice margin in Canada? So if you want to keep them here, you got to pay just a little bit more. And these price hikes are not surprising. We saw after I put in my order for my Model Y, the price went up $500. And I thought, interesting. I wonder if this is going to come back down in a week. And it didn't. This is the price that they believe the market will bear. And because they use real-time pricing, like you see with the airline tickets, movie theaters, hotels, they can track what sales are actually doing. They know what their inventory needs to be, and they know how to price it to move it. Yeah, so, but looking back at the chart that you had that showed the margins over time, when we were seeing those consistent 26, 27% margins, that was at the peak of automobile shortages, when you could charge whatever you wanted. We had Model Ys being sold for $70,000. I hoped that would be unsustainable because that, of course, would have put it out of my budget and out of the budget of a lot of consumers. And the prices come back down. And despite the price coming down $15,000, $20,000, they're still maintaining a strong positive margin. There are more cost efficiencies to realize. A lot of the minerals and most expensive parts of the car have gotten cheaper over the last year. We're seeing new efficiencies with the Model 3. And I believe there are more efficiencies always to be gained in the production of every model, including the Model Y. So I think we could see even a $500 price cut that would also lead to higher margins. So in terms of have we bottomed out, if prices remain at today's levels, then margins will go up. But I would say there is a very real chance that prices could come down even further in the future, especially if interest rates don't begin to come back down as well.
Good. Okay. I'm glad you said that last part because I agree with you. So us Tesla investors right now, we are very sensitive at this point because after the earnings call, the sentiment has gone really low because there was no near-term catalyst, and so there's really no bottom. And so welcoming news like this is going to help, can give it a stability. But at the end of the day, I'm a belief, and I think you are as well, that Tesla does variable pricing. So even though we see it go up, it might go down. None of that actually really makes I wouldn't read too much into it per se, but it's good that some investors are saying that that's a sign. And then here's another thought, which is, I like what JP said here, which is price is not confirmation of bottom margins. It's just one component. Another one is the battery change to M3P instead of the NCM. It's a bigger catalyst to cause a good reduction than factory production exceeding 5,000 per week. This increase in price paired with the switch to the batteries reduces the average cost from 12,000 to 6,500. That's significant. What's your understanding of what he's referring to? Is this going to show up in Q4? And then you also hinted beyond the battery change, there might be some of the other cost of goods that might show up in Q4 anyways. So price is just one potential thing, but there might be a lot of other things that surprise, right?
Sure. So go ahead and leave that one up actually for a second, if you wouldn't mind. The M3P there. So the long range battery is currently using NCM. That's the nickel cobalt. That's the high nickel battery that we think of when we say lithium ion. Switching to an M3P, that's a newer chemistry. Jordan Giesecke from The Limiting Factor has done a number of deep dives on that, which go into a degree of depth that I couldn't possibly sum up in a sentence. But the other one is the LFP batteries, the lithium iron phosphate. They're a little heavier. You get a little bit less bang for your weight, but they're vastly cheaper. So you can go ahead and take that down. Both of those small changes will have two effects. One is that they diversify the battery supply chain. If you're using more and different chemistries, you end up with fewer bottlenecks. And because NCM is the most expensive chemistry, just because of the ingredients that it uses, if you can get away from it, do so. And the fact that China's using CATL, BYD, LG, Panasonic, and their own batteries. They're using 5 of the world's largest battery manufacturers just to keep up with what they're producing is a great sign. And it means that one of those companies can't come along and try and squeeze them too much because they know that Tesla will use absolutely anybody's batteries as long as they're up to spec. And they can, regardless of not just the chemistry, but the form factor. Because the BYDs are blade batteries. The LFPs are they're all different sizes of cylinders we've got for the NCM. And I think there might be pouch batteries in one car, but it's escaping me at the moment. So they're using everything in every way, and it all just works.
Right. Okay, I'm going to show this graph once more. The gross margin over time. The last 4 here was happened Q1 19%, Q2 18%, Q3 16%. Every one of those quarters, us Tesla people kept saying, "Oh, you know that the gross margin, the cost of goods, is going to fall significantly," and it certainly didn't show that it has. I'm pretty confident that finally we're going to see it in Q4. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.
Sure. And I would say that the fact that margins only went down by a couple percent while the cost of the vehicles went down substantially is a good sign. And I
Yeah,
think that's, is
that's a good point.
what we don't know is how much the cost of goods sold have continued to fall. All we can see is actual retail cost. I mean, for that matter, we don't know the idea of premium connectivity not being something that's just included is fairly new. I will absolutely be subscribing to that. It's a small amount of money, but if you're talking, uh, you know, just 1 million subscribers, that's $10 million a month in gross revenue. So it's going to be, there's a lot of room for margin improvements there. And we've also seen the cut in price on FSD, which may improve take rates and increase the amount of revenue there. We don't know what percentage of the FSD fee is realized on the books versus held for future delivery, but some significant percentage of it. So any increase to the take rate could also offset that.
Wonderful. Thank you, Brian. So please follow him at My Tesla Weekend on YouTube.